Hello everyone and welcome to CryptoRed, the channel for crypto news, the general rise in the crypto market today. A lot has happened. We'll talk about the White House and its report on cryptocurrencies. We'll also cover the new rules around altcoins ETFs in the US. Truly good news for many altcoins. We'll also talk about Polygon, which experienced a serious issue, almost a complete halt of the Polygon POS chain. We'll also discuss Bay's overtaking Solana and news about Ethereum and eToro. In short, lots to cover today. Let's start with the cryptocurrency prices. A nearly general rise, BTC at $118,000, Ethereum at $3,800, XRP at $3, more than $3. Now, MicroStrategy, or rather Strategy, its new name, just about $2.5 billion worth of BTC at an average price of $117,000. They're still buying. Could they have bought from the whale who recently sold BTC? It's really possible. With such a large amount, the timing lines up perfectly, at least for part of the fund. In any case, Strategy continues to massively accumulate BTC. On Ethereum also, there are more and more treasury companies buying BTC. I already talked about Bitmain. It still ranks first with $2.4 billion. Think about it. In one day, Strategy bought more Bitcoin than Bitmain bought in more than a month. So really, they're really powerful. MicroStrategy, they have a lot of power. They're still buying. They have dozens of Bitcoins. It's of billions of Bitcoins. Is just huge. Now, the White House crypto report on cryptocurrencies. A document has just been released. This document has been in the works for months now. There's not much in this report, honestly, that will really shake things up. There are changes in the US crypto taxations, like they're clearing taxes on foreign held crypto, but overall, honestly, not much. Interestingly, the first article I saw claimed that the report would not mention Bitcoin Reserve at all, the Bitcoin Reserve, US Bitcoin Reserve, but the report does mention it. It just references what Donald Trump and previous executive order already stated, so there is nothing new about the Bitcoin Reserve, that's true. However, according to Bohines, who work under David Sachs, leading this task force, new information is coming soon. Their goal remains to accumulate as much BTC as possible, but they won't say how much they currently hold. It seems like they're hiding something. Now I'm going into pure speculation mode. Maybe they don't want to reveal too much to avoid sparking market movement before they finish buying. Maybe they just don't want to reveal their full strategy to avoid another country doing it. Because this everybody knows that the US doesn't want to fall behind in the crypto space. And they know it will turn into a BTC buying race soon, so I'm sure they will buy someday. Now, the good news for altcoins. It's about a new listing standard proposal, a rule set for crypto listing crypto ETFs in the US. Some exchanges submitted a request to the SEC, and apparently the SEC agrees with the proposed rules. We're still waiting for the full details, but the idea is that it will be extremely simple to list crypto ETFs in the US. There will be only one criterion, one requirement. The altcoin must have a derivative market, specifically futures, on Coinbase, and it must have existed for more than 6 months. And here is the list of cryptos that already meet this criterion. We have Ethereum, Dogecoin, Polkadot, Bitcoin Cash, Shiba, Avalanche, Chainlink, Stellar, Solana, Zora, Cardano, and XRP. These are cryptocurrencies that could very easily get their own ETFs. Ethereum already has its own spot ETFs, but now all the others could have it soon. According to ETF specialists, we should expect approval for all these crypto ETFs in the US by September or October of this year. It will be a wave of ETFs arriving all at once, just like we had the wave of Bitcoin ETFs, and after that we had the wave of Ether ETFs. We'll now see a wave of altcoin ETFs coming at once. In the end, we'll see whether these cryptocurrencies really gain adoption. This ETF really gain adoption. The market will decide. Are people even interested in buying stellar ETFs? I don't know. I don't think so, honestly. We've already seen that the Ether ETFs had struggled to take off compared to Bitcoin ETF. I think the others will struggle even more. If I had to make a prediction, I'd say Bitcoin will always remain number one in the ETF race, Ethereum number 2. And the rest will remain far behind in terms of money flowing into these ETFs. That's how I see things going on. Still, it's a very good development. I think we could see some positive momentum around these cryptocurrencies as a result of ETF adoption. Also worth noting is that many of these assets are already listed on Coinbase in the derivative market. So ETF application, but but there are a few that have not yet an ETF application. For instance, Bitcoin Cash or Shiba Inu or Chainlink ETF or Stellar ETF, they don't have a feeling yet, according to Bloomberg. For those, there haven't been any formal application submitted yet. Bitcoin and Ether and Solana, of course, there is, and the different altcoins that already made a proposal to have an ETF should be approved by October, as I said. Now, regarding the Polygon blockchain, it stopped functioning for about an hour. It's actually a bit more complicated. Polygon claims, no, the blockchain didn't stop working. We had the consensus issue, but the blockchain itself kept running. However, the RPCs, the access point that allowed communication with the blockchain from Web2 services to Web3 services, those did stop functioning, and they're currently working on fixing this issue definitely. Clearly, there was a bug, a consensus problem. They recently did a major update, and it appears there may have been a lack of testing with this update. A bug can happen, and it did in this case affect the blockchain. Now, let's talk about Base and Solana. It's a bit of a meme coin battle, like we saw a few months ago. Remember, there was Ethereum, then there was Solana, then Ethereum, then Base. There was even a phase where Base had its moment too, but Solana remained the clear leader in the meme coin market. Now, however, Zora, a service on Base, is creating a huge number of tokens daily. Base has overtaken Solana in terms of new coins launched per day. Last month, Zora was creating around 6,000 tokens per day. Now it's more around 10 times this number. Why? What's the difference between the two, Pump.fun and Zora? Pump.fun is meme coin launchpad. It was designed entirely for launching meme coins, and it's built on Solana. Zora is different. It's more of a social network where every post that's created also becomes a token. Not necessarily a meme coin, but every post becomes a token. So people can just post on Zora and automatically launch a token. This creates issue because celebrities, for instance, don't want to be associated with meme coins. It could lead to brand dilution, with people accusing them of just trying to launch dozens of meme coins to earn money, to get the money of their followers. Still, Zora has found a certain audience of users who are currently speculating actively on the platform. People are often looking for new forms of speculation, new casinos. We had Pump.fan and now we have Zora. It shows how quickly things can evolve in the crypto and meme coins. We saw Pump.fan, the leader, overtaken by Let's Bank, which had over 80% market share. Now Zora is emerging and taking a lot of space again. But to me, they're not really competition. Zora takes more of a social network approach, creating a community and assigning monetary value to posts. This value can be used to reward the post creator if the post goes viral. So content creator could earn money from their post. It's a different angle from Pump.fan meme coin style launchpad, although it still shares some similarities. I really enjoy seeing different philosophies in product, and in the end, it's best to let the market decide what works best. Now, let's talk about eToro. The trading giants announced plan to tokenize assets on Ethereum. And of course, since it's on Ethereum, it will be available 24/7. They just made the announcement. Unlike Robinhood, which is launching on Arbitrum and then on their own blockchain, eToro said no, we're launching on Ethereum using ERC20 tokens, a very Ethereum maxi approach. Some might say, but gas fees on Ethereum can be really high. It's true. They've come down recently, but they're bound to rise again. Still, I see things differently. eToro is choosing Ethereum as a settlement layer, a kind of decentralized database that records transactions and eliminates intermediaries. People don't realize how many third-party trading firms rely on custodians, clearinghouse, and other layers that add complexity. A blockchain simplifies all of that. User could buy tokenized stocks on eToro without even realizing it. They think they're just buying Tesla stock when in fact it's a tokenized version of it. eToro handles the tokenization and keeps the token in its own wallet. That means if someone's buy or sell Tesla stock within the eToro app, there's no need for blockchain movement. Only when there's an actual transfer of the token, which is rare, I believe, does a blockchain transaction really occur. So I think eToro can make it work using Ethereum, even with higher fees, because there won't be that many actual on-chain transactions. They'll mostly happen in rare cases, like when one entity transfers to another. That's probably why they didn't go with the layer 2. There's no need to create their own L2 and incur all the associated costs. Managing an L2 is expensive. You need to launch an associated explorer like Etherscan, which alone could cost between $500,000 and $2 million per year. Infrastructure, node, and maintenance can cost $10 to $20 million a year. So by using a public blockchain like Ethereum, they avoid all that, fewer costs, and I believe that's the choice they made. That's what I wanted to share with you today about the latest crypto news. I hope you enjoyed the content. If you're interested in yield strategies, check the link in the description, or just drop me a comment, and we'll talk about what best yield is adapted to your wallet, to portfolio. Bye-bye.